Have you ever traveled to another country? It's amazing, right? You see new places, you try new food, and you try to buy a souvenir for your mum. But when you go to pay, you realize your money is, well, your money, it's not their money, so you have to exchange it. You give them your dollars or your rand or your naira, and they give you their local currency, minus a little fee for their trouble, of course. This happens every single day, millions of times over, not just for tourists, but for huge companies buying and selling things across the globe. It's a massive, complicated dance of numbers. For decades, the main currency in this global dance has been the US dollar. It's like the world's unofficial money. When Nigeria sells oil to Japan, they often get paid in dollars. When a company in Kenya buys electronics from South Korea, they usually pay in dollars. The dollar is the big boss, the superstar everyone wants to work with. This system works, but it means almost everyone has to go through the American financial system at some point. It's like trying to make a phone call to your neighbor, but you have to route the call through an operator in New York City every single time. It can be slow and it can be expensive. This reliance on the dollar gives the United States a lot of power. Because most international payments flow through American banks, the US can see who is paying whom. More importantly, it can decide to block payments to certain countries or companies if it wants to. This is a powerful tool in global politics, like having the master key to the world's financial hotel. For other countries, this can be a bit nerve-wracking. Imagine if your landlord also controlled your bank account. You'd probably want to find a new apartment, or at least a new bank, just in case you have a disagreement. So, for many countries, this whole setup is starting to feel a little outdated and a bit risky. They are looking at this global financial system, which is built around one country's currency, and thinking, is there another way to do this? What if there was a different route for money to travel? A route that was faster, cheaper, and didn't always have to make a stop in America? This question is what's pushing countries, especially big ones like China, to start drawing up new maps for the world of international finance, creating new pathways for money to move around the planet. Now let's talk about China. China is a global economic powerhouse. It makes and sells a ton of stuff to the rest of the world, and it buys a lot of things too, especially from Africa. But for a long time, most of this business was done using US dollars. It's like being the world's biggest chef, but you have to borrow your neighbor's pots and pans every time you want to cook. At some point, you're going to want your own set of cookware. China looked at this situation and decided it was time to get its own financial pots and pans. It wants its own currency, the yuan, to be used more in global trade. This move is part of a bigger strategy called de-dollarization. It sounds complicated, but the idea is simple. Reduce the world's dependence on the US dollar. Why? Well, for one, it's about control. If your trades are done in your own currency, you don't have to worry about another country's rules or sanctions suddenly messing up your business. It also saves money. Every time you change yuan into dollars and then dollars into another currency, you lose a little bit in fees. Doing business directly in yuan cuts out the middleman, making things cheaper for everyone involved in the transaction. To make this happen, China has been working hard to make the yuan a more attractive option for international partners. They've been signing agreements with countries to trade directly in their local currencies. The share of the yuan in China's own cross-border payments has shot up dramatically, from around 40% in 2021 to over 50% by 2024. This shows that more and more businesses are choosing to settle their accounts in yuan. It's a clear signal that China is not just thinking about this. It's actively building a new system and encouraging its partners around the world to join in and start using it. This isn't just about making things easier for China. The goal is to create a true alternative for the rest of the world. Think of it like a new operating system for your computer. For a long time, there was basically one main option that everyone used. Now, China is offering a different one. This gives countries more choice and flexibility. For nations in Africa, Asia, and the Middle East that do a lot of business with China, the option to use the yuan directly could be a game changer, fundamentally altering how they connect with the global economy and manage their financial futures. So, how is China actually doing this? They built a special system called the Cross-Border Interbank Payment System, or CIPS. You can think of it as China's very own financial highway for international payments. For years, the main highway has been a network called SWIFT, which is based in Europe but heavily influenced by the US. Most banks in the world use SWIFT to send messages about transferring money. It's reliable, but it can be slow, sometimes taking 3 to 5 days for money to arrive. CIPS is different. It's not just a messaging system, it's a payment and clearing system designed specifically for the Yuan, and it can settle transactions in seconds. Recently, in June 2025, China expanded CIPS right into Africa. Major financial institutions like the African Export-Import Bank, or Afrexim Bank, and South Africa's Standard Bank have become direct participants. This is a huge deal. It means they can now process payments in Yuan directly, without needing to go through other international banks as intermediaries. It's like getting a direct flight instead of one with 2 layovers. The journey is faster, simpler, and cheaper. This connection allows African businesses trading with China to pay and get paid directly in Yuan, streamlining the entire process. The benefits for African countries could be enormous. One of the biggest advantages is the potential to lower costs. For example, sending money home or remittances can be very expensive in Africa, with fees averaging nearly 8%. Systems like CIPS, especially when combined with China's new digital currency, the eCNY, could slash these costs. Faster transactions also mean that businesses get their money quicker, which helps with cash flow and planning. Furthermore, by using the Yuan, African economies can reduce their exposure to the ups and downs of the US dollar, bringing more stability to their trade. This move is also happening at a time when some Western banks are scaling back their operations in Africa. China is stepping in to fill that gap, offering a new financial infrastructure that is modern and directly linked to one of the world's largest economies. This isn't just about technology, it's about building stronger economic ties. As more African banks and countries join this system, it creates a powerful network that could reshape trade relationships, not just between Africa and China, but across the entire continent, fostering a new era of financial independence and South-South cooperation. Of course, this new system isn't without its challenges. The biggest hurdle for CIPS is that it only works with one currency, the Chinese yuan. SWIFT, on the other hand, is multi-currency. It can handle messages for transactions in dollars, euros, yen, and almost any other currency you can think of. For a business in Nigeria that trades with both China and Germany, using CIPS for one and a different system for the other might be complicated. The global economy is used to the flexibility of the dollar, so getting everyone to switch to a yuan-only system for a large portion of their business will take time and a lot of convincing. Another concern that has been raised is about privacy and control. The CIPS system, especially as it integrates with China's digital yuan, is centralized and managed by the Chinese government. While this makes it very efficient, some critics worry about the potential for state surveillance. They argue that a government having a direct line of sight into every transaction could compromise privacy. These are valid questions that potential users will have to weigh. Countries and businesses will need to decide if the benefits of efficiency and lower costs outweigh the concerns about data security and potential government oversight in their financial affairs. Despite these challenges, the expansion of CIPS into Africa is a sign that the world's financial landscape is changing. It's moving away from a single dominant system toward a more multipolar one, where different powers offer different options. Africa itself is not just waiting for others, it's building its own infrastructure, like the Pan-African Payment and Settlement System, or PAPS, to boost trade within the continent using local currencies. The rise of these alternative systems shows a global desire for more financial autonomy and less reliance on a single point of control. So, where does this all lead? Will China's new payment system in Africa mark the beginning of the end for the dollar's dominance? Or will it simply become one of several important systems in a more complex global network? It's too early to say for sure, but what is clear is that the old way of doing things is being challenged. New players are entering the field, the rules of the game are being rewritten, and countries in Africa are now in a position where they have more choices than ever before. The world of money is getting a major update, and it's happening right now.